Gold is the money of kings. Silver is the money of gentlemen. Barter is the money of peasants.
That was a quote by Norman Augustine, born in 1935, a famous engineer and businessman, reflecting on the timeless value of gold. Now, let's explore why buying gold could secure your wealth forever. Did you know that one simple asset could protect your money no matter what happens in the economy? It's not a stock, it's not real estate, and it's certainly not a get-rich-quick scheme. It's gold. Today, we're going to explain why buying gold could secure your wealth forever, and how even small amounts can make a huge difference over time. Gold has been valuable for thousands of years. Civilizations from ancient Egypt to modern times have used it to store wealth and protect against uncertainty. Unlike cash, which can lose value due to inflation, gold tends to hold its value over decades. And unlike individual stocks, gold isn't tied to a single company or industry. It's a universal store of value. Gold is different from most investments because it doesn't rely on a single company, a single economy, or a single currency. Stocks can rise or fall overnight, and cash slowly loses value with inflation. But gold has maintained its value for thousands of years across countries and economic systems. Even small amounts of gold can protect your money from unexpected market crashes, inflation, or financial uncertainty. It's like having a quiet, reliable safety net that doesn't make headlines but always works behind the scenes. When other investments fluctuate wildly, gold tends to hold steady. It doesn't promise instant wealth, but it protects your wealth, keeps it safe, and allows it to grow slowly over time without being destroyed by external risks. By including gold in your financial plan, you're not trying to get rich fast. You're building stability, creating a shield for your money, and giving yourself the freedom to take smarter risks elsewhere, knowing that part of your wealth is always secure. Gold acts as a hedge against inflation. When prices rise, your money buys less, but gold usually rises in value too. It also protects against financial crisis, market crashes, and economic uncertainty. Even if stocks fall or currencies lose value, gold remains a safe asset. You don't need millions to start. You can buy gold in small amounts, coins, bars, or even digital gold ETFs. Even just a few dollars a week can gradually build a secure portion of your portfolio. Consistency matters more than the amount. Small, steady investments in gold over time can grow into a substantial safety net. Unlike individual stocks, gold doesn't try to beat the market. It matches long-term value trends and reduces risk in your portfolio. It's not exciting, it doesn't skyrocket overnight, but it doesn't collapse overnight either. Consistency and stability often beat intensity when it comes to long-term wealth. So if you want to protect your wealth for the long term, think of gold as your financial safety net. Even small, regular investments in gold can secure your future against inflation, market crashes, and uncertainty. Your future self will thank you for making this simple but smart choice. If you want to learn more about investing smartly, how to diversify, and how small daily habits can grow into real wealth, stay with us. Thanks for watching. Take care of your future, one small choice at a time. And if you want a friend on that journey, don't forget to subscribe. See you in the next video.